Silver looks like it's following gold down the hole, while the pet supply stock Chewy is headed uptown. Hang around and I'll show them both to you. Hi, this is Tim from TradingStrategyGuides.com. We may or may not have a U.S. election decision. I'm still not 100% sure, but be careful trading for the first few days of the week. Today we'll be looking at a descending triangle on spot silver and an ascending triangle on the online pet supply house Chewy. We'll look at that, but first let's take a look at the active trades. Later on, this week's trading maxim. Happy Monday. Let's take a look at the active trades. Well, Bitcoin just flew up like a rocket this week, didn't it? But it's been pulling back for a few days here, so I've trailed the stop up to 13,488.12 to lock in 2647.39 on this bad boy. MannKind Corporation, or MNKD, triggered a buy at 223 on Thursday, and Friday popped right up there and hit our first target at 235. So I moved the stop up to break even and got half off for profit right there. This is the weekly chart of the US dollar Japanese yen currency pair. Finally gave us this weekly signal on Friday. I got in it a little bit before the close and it pulled back just a few pips after I entered, but I'm short right here around 103.25. My stop loss is 104.12. My first target is 102.67. I may have mentioned this in Friday's video, but crude oil pushed on down here, hit our first target, got half off, moved the stop to break even on the remainder. So now it popped on up here and took us out on the second half. So we're done with crude now with a little bit of profit. That's all the active trades for today. Let's take a look at today's trade picks. Let's start by looking at this descending triangle on silver, and it's just like the one we were looking at on gold last week. A descending triangle consists of a strong support level like this one here at 2250 with several historical touches or approaches of the line, and a series of lower highs as fewer and fewer traders are thinking about taking this long. Each time the price gets back down to the support level, it chips away at buy orders until it finally breaks through. It should break out of the pattern with strong momentum. The descending triangle is a bearish pattern, and I will only take a sell signal on it. And a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. Now, before I talk about this trade plan, I want to point something out. Thursday and Friday's candles right here are looking pretty bullish. It's possible that this will push up and out of this triangle this week. If it does, I'll revisit this trade plan and let you know later in the week how we'll handle it. Now here's the trade plan. We're going to sell a daily candle close below the triangle or below 2250. On the breaking candle, to enter full-size position, we want this volume bar to reach up at least to the volume average. If it doesn't reach the average but does reach at least 75% of the average, I'll open a half-size position to reduce risk. You can calculate the percentage by dividing this volume by this volume average, and you should get at least 0.75. If you don't get that much, I would stand aside on this trade. Stop loss is 1.5 times the ATR. First target is 1 times the ATR. So when this thing breaks down here and is getting ready to close, say 15 minutes or so before the close, set up your sell order. Look down here at the ATR, multiply that number by 1.5. Measure that distance above the entry for your stop loss. Measure 1 ATR below the entry for your first target. If after entering the trade we get a candle close back inside the triangle, We'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive and hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. Typically, I do this using two positions. The first position has a stop loss and a take profit and will close automatically when the first target is hit. Second position will only have a stop loss and will be allowed to run. When the first target is hit, move the stop loss to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on silver. Let's take a look at Chewy. So Chewy has a nice ascending triangle. Ascending triangle is just the opposite of the descending triangle that we just took a look at. But here's the official spiel. An ascending triangle consists of a strong resistance level like this one here at 72.50, with several historical touches or approaches of the line and a series of higher lows as fewer and fewer traders are thinking about taking this short. Each time the price gets back up to the resistance level, it chips away at sell orders until it finally breaks through. It should break out of the pattern with strong momentum. The ascending triangle is a bullish pattern and I will only take a buy signal from it. And just like the descending triangle, a good consolidation pattern like this should be accompanied by a decline in volume and volatility like you see down here. I measure the volatility using the ATR, which shows the average length of the last 14 candles. And here's the Chewy trade plan. We're going to buy a daily candle close above the triangle or above 72.50. Now, I'm not going to bore you with this whole trade management spiel. The management details are always the same. If there is at least average volume, enter a full-size position. So you want to see that, reach that. If there's 75% volume, enter a half-size position. Otherwise, stand aside. Remember, your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. If you get a close back inside the triangle after you enter the position, close the position and take the loss. Get half off for profit when it hits the first target and move the stop to break even on the remainder. 2% risk on this trade. And that's today's setup on Chewy. Okay guys, this is how I manage these trades. You do you. Make sure you understand what you're comfortable with and trade it that way. And I use the trading maxims to keep myself in line. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 5, a line is never just a line, it's always a zone. If you've been on this channel for more than a minute or so, you've heard me say this one. When you draw a support or resistance line, whether it's horizontal or diagonal, it doesn't matter, you have to understand that it's never just a line. The price will almost never hit the line exactly. It may stop and turn before the line or push through it before reversing. There's a reason that this is early in my list of maxims. I spent a lot of time early in my learning period looking for prices to turn exactly at the line. I mean, I was serious to the point that I put my stop like 1 or 2 ticks behind the line. Now, this may seem obviously stupid to some of you out there, and yes, I agree with you now. You see, my background is in engineering and software development, so precision has been my life. The market just isn't like that. The patterns are not pretty and symmetrical, no matter how much you want them to be, and the lines are just general location ideas. Now, usually at this point, I get people asking how many ticks or pips wide is the zone. They want me to say it's exactly 5 pips on either side of the line or something like that. I am sorry if I'm stepping on toes when I say this, but if you ask that question, you are not getting it. There is no answer to that question. The only answer is to squint up your eyes and eyeball it. If it's in the general vicinity of a line, then I would call it in the zone. Remember our silver trade plan for today. We're going to sell a daily candle close below the triangle or below 22.50. And the Chewy trade plan today, we're going to buy a daily candle close above the triangle or above 72.50. For both trades, full size position if you've got average volume or better, half size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR. First target is 1 times the ATR. And look in the description box for a link to the trade management video. Don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box below. And don't miss my Dream Trade segment on Wednesday's videos. Click the link below to find out more about Dream Trades. Come back Wednesday for the next installment of the Trading Education series. This time we're going to talk about price action. Be here Friday for my Strategy of the Week and next Monday for my Trade Pick. Our videos come out at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. You guys have a great week, and I will see you on Wednesday.